the Federal Reserve jammed interest rates up so fast. The economy is holding on, but we definitely have, labor concerns, which is going to drive inflation up, things of that nature. The housing concerns, we're going to start seeing oil going up. They're talking about $100 a barrel. Now, maybe $100 a barrel now isn't what $100 a barrel used to be 10 years ago, but that's still expensive for oil. And that's going to show up in our pocket. So I see meaningful downside in the market ahead now.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, markets, what are they going to do? Are rates still going to go higher? The Fed has taken a pause, but how long will that pause last for? That's the question. I'd like to know your opinion. How high will rates go, in your opinion? Will we hit double digits? Unlikely, but you never know. Hey, send us an email, kl@kerrylutz.com. Right now, we've got our good friend, James Locke from poollocke.com with us. Hey, James, great to have you back. And so the rates, what do you think is going to happen here? I mean, today, hey, it's September 25th. Up until about a half hour ago when I looked at markets, they were pretty much red across the board. Is this a portent of things to come, or is it all just temporary?
No, I would I would think it's indications of things to come. The Fed is indicated that we're going to stay here for a while, and that actually spooked the markets a little bit. When they didn't raise rates at the last meeting, they basically came out and said, "Hey, we didn't raise rates, but you guys are all off target, right? We're not going to be lowering as soon as you thought, right?" And when do they think that it's going to come around? Probably we might start hearing chatter in the first quarter of next year, but I don't know that they're going to be cutting rates, anytime soon. But as far as the market is concerned, and we'll come back to the rates in a second, but when I was trading options, I was always, I loved looking at charts and graphs and then things like that. So this one popped up on me, the equal weighting. So if you take the S&P 500, you equal weight everything. We're 2% lower than the 200-day moving average. And I know it's just numbers, right? And you got to take things in big pictures. But, history maybe doesn't repeat itself, but it certainly shadows itself.
And it rhymes, as Mark Twain used to
That's right.
say.
So the number of times that this has happened before: August of 98, January of 2000, September of 07, October of 2018, and March of 2020, right? Those are all prominent dates in financial history, so to speak, right? Mm-hmm. So I don't know what the future is going to hold. No one has that crystal ball. I can only look backwards just like everyone else. But I see, the Federal Reserve jammed interest rates up so fast. The economy is holding on, but we definitely have, labor concerns, which is going to drive inflation up, things of that nature. The housing concerns, we're going to start seeing oil going up. They're talking about $100 a barrel. Now, maybe $100 a barrel now isn't what $100 a barrel used to be 10 years ago, but that's still expensive for oil, and that's going to show up in our pocket. So I see meaningful downside in the market ahead. Now, does that mean there's going to be a crash? I don't think so, but I have no reason to sit here and say that, you should just be in there with both fists trying to buy.
Okay. But there's bargains. I mean, look, Verizon Wireless, I can get an 8% dividend there. Is it worth the risk for a Verizon? And I'm not asking you to recommend Verizon. I'm just giving it as an example of a stock that's really pumping out the dividends, or like a stock like Walgreens, right?
Yeah, really, absolutely. And our RIA is we're pumping out about 4.6% dividend portfolio on our stocks. I'm not anti-stock market ever. I'm a bull, just like the next guy. Right? I want the market to go up, but in this environment, I think what you're talking about with Verizon, Walgreens is you want to make sure you're getting paid, right? We want to make sure we're getting paid the right amount to take that risk. So we're taking risk for reward's sake, not just risk for risk's sake. Kind of, willy-nilly and that sort of thing. I mean, I have a client, I love him dearly. He's awesome. He's just in love with Apple stock. Now, I can't tell you, like, all Apple does is go up. You know what I mean?
Apple only goes up, right?
That's kind of, but at some point it might not, or the other thing is at some point, maybe you need to diversify that a little bit. And that's where you're right. There are lots of bargains out there. So, we could have a trickle down in the S&P and all the way back down to, 4,000 or something like that, and it not, break the bank anywhere. But there's certainly lots of stocks and dividend paying stocks out there that, can provide opportunity that will hold their value and pay you a good dividend along the way.
So how much risk do you think there is, in these higher dividend paying stocks if the broader market takes a big dive?
I think if you're in the right ones, you should be able to break even. A big dive, when you say a big dive, like 2022, we're talking about.
Yeah, 20, 30,
yeah.
40%.
If you talk about, once you start talking about over 20%, it's hard to get yourself to that break even point. We were able to in 2022, to come out in the black by very little, and of course, consequently, those same dividend stocks aren't going to be soaring as much as they were this year, right? So, you didn't get hit on the way down. You're not going to scoop it on the way back. Once you start talking about 30, 35% drop, now it's hard. Everything's, when the tide goes that low, all ships are going to sink a little. But I was even just talking about, you're talking 10% drop. There's no reason you shouldn't be able to maintain these higher dividend pieces. And like I said, I even find some nuggets in there that are moving in the right direction. So okay. I don't know that we're going to have a 30% drop. Don't quote me on that one.
Hey, nobody knows the future, but we can kind of try to guess. We got to guess.
Right.
You don't know the future. You got to guess. So I guess, is there a defensive posture to take besides dividend stocks?
Yeah.
Sell out positions?
And, what's crazy, and it's even, sometimes when I look at things, but, I always like the real estate, world. And despite, interest rates as high as they are, there's only so much land out there. And, we're seeing people with these very low mortgages holding on to their properties now, right? So
yeah, for sure.
So now you're reducing inventory kind of naturally, or the Fed kind of reduced inventory naturally, or that might have been an effect of what happened. And guess what that does? That's going to push, pressure on inflation, which is what we're trying to fight in the long run. So, I do think there's value in the real estate as well. What I would hope happens, and, I know this is almost, it's never going to happen, but we got this government shutdown, kind of hanging over us on October 1st. And, that's a storm that's brewing. But if people can communicate and not get to a shutdown, but figure out a way to balance the budget, right? That's going to help curb inflation greater than any quarter point move by the Fed.
That's never going to happen, right? I mean, you're never going to balance the budget.
I'm praying. Hey,
in my life,
back in the 90s, right? It happened back in the 90s with Clinton, right? Right.
Well, that was a fake balancing because there was still stealing from the Social Security Trust Fund, and there's no trust fund left, so they don't have that little scam to pull anymore. So how do they do it?
Right. Well, and listen, I'm with you. I don't know that they're going to be able to balance it, and I think shutting the government down, that's just a political tactic move. It hurts more people than it helps. In the long run, your Social Security check is still going to get paid if the government shuts down on the 1st. So there isn't, that kind of concern. But any sort of movement to, better fiscal conservatism is going to, like I said, make a much bigger effect on the American people and their pockets down the line. Congress always holds that card, and they never play it because it doesn't get votes, right? And, that's the problem.
Yeah.
So I'd like to see them do more to work together to avoid this government shutdown on the first in such a way that's actually going to help curb inflation. That would be the ideal situation.
So where are we going to end up the year here, James? Your prediction?
I don't see us. I think the Fed, whenever they have their meeting in November, is they're going to keep beating the drum, and they're going to push that. Whenever rates are going to be cut even further out. I'd be surprised if we heard any kind of positive news out of them. So I think we end up, closer to 4,000 on the S&P than we do to.
We're going to be checking you up, and we're going to see how close your prediction comes to reality, James. Yep. Appreciate you coming on. Hey, you got a question for James or myself? Shoot me an email, kl@kerrylutz.com. And if you want to find James's link, poollocke.com. It's in the show notes to this interview on financialsurvivalnetwork.com. Just click it, take you right there. While you're there, sign up for your free newsletter. James, appreciate your time coming on with us, and we will talk to you again by the end of the year, and hold your feet to the fire.
Yeah, that's fine. I love it. Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.